Hi, my name is Victor, and I have the Invest in Value channel where I look for companies that I could buy at a discount to give me a good return. In this video, I'm going to cover a real estate investment trust by the name of CareTrust. CareTrust provides properties to facilities to run to basically house the elderly that need a place to live, and specifically need a place to live where they can get nursing care, health care, and so forth. This is a marketplace that isn't going to go anywhere. A lot of people are retiring. A lot of people are retiring with a good nest egg, and they want to be comfortable. They want to have longevity. They want to be cared for. So I think this is a good business. It's a business that's in need in many communities. And let's take a look at the financials for this company. And I'll tell you why I decided to invest in this company over 3 years ago, continue to believe in this company. This company is predominantly operated on the western states of the United States. Their biggest state is California. California has a big population and a big population of people who have retired. And they also operate in Texas, which is another big state, but they tend to be on the west. And it makes sense. The company was founded in Southern California by people who saw a need of this type of property for people who are retired and that need nursing care or health care, and they need a place to live. They have 198 properties in total and 1.7 billion in investments. Their market cap's right about the same as the investments. And their stock, relative to 2022, their trading range is pretty narrow compared to a Netflix as an example. Let me tell you more about this company. If you look at the stock price of this company over the last 12 months, they've gone down 13.6%. And they've had a lot of up and down moves on their stock. What I like about that is if I know a company, it gives me an opportunity to buy when it's low and to sell when it's high. I've done that with CTRE. It really rose up really about 18 months ago. We'll see that in the 5-year that I show next. And I was able to sell at a really nice gain, a 40% gain. Anytime that I'm holding this stock, I'm being paid more than 5% dividend. In some cases, if you catch it at the right time, closer to 7%. So I like the volatility, although it trades kind of in a narrow band compared to other companies in 2022. But that's what their stock's been over the last 12 months. Now let's go to the 5-year. Looking at the 5-year, if you would have bought this stock 5 years ago, held it, you'd be up 24%, and you would have been paid 5 to 7% dividend each year, which really adds up. So it's been a nice investment. Again, trades in a nice narrow band. Like many stocks at the beginning of 2020, when the pandemic hit, boy, their stock really took a beating. I started buying right around this time here, and it really rose to a high level. I sold, and then I'm reestablishing a position since it's come back down. So this stock has provided a good entry point for me. I think it's a very well-run company, provides a great dividend, and is a part of my portfolio. So I may like a company, I may believe that they're, in a good industry and doing a good job overall, but really it's about the numbers that really compel me to invest in a company. I like to run the companies that I decide to invest in a intrinsic value model that I've created, big part by borrowing ideas and models from other YouTubers. So thank you out there. So I have an MBA and was able to go back to my days of my MBA school as well as my accounting years and put this together in an Excel spreadsheet. Really, this is taking into account free cash flows that I expect in the year 2022. They haven't announced their full year results yet. They'll be announcing them soon, but they haven't. That's my best estimate at where they're going to come in. And I took 2021 full numbers, discounted it by 25%, and that's where I got to 113. And really looking at this company, I believe is going to grow at 10%. There's high demand on what they do, so I think they'll continue to grow. And they'll grow at that rate for the initial 4 years, I guess 3 years beyond 2022. And then from there, a nice conservative 2% growth going into the future. This really sets up that, hey, if this model is correct, the company has an intrinsic value as of today of 1.4 billion. But the market cap right now is at 1.87 billion. So I believe that at this time, it's not wise for me to buy additional shares. I'd be buying them at a 24% premium. And that's not a good buy. I have to wait for the stock price to either come down, and then I can buy when I can get a discount on the stock price. Or if they start operating with a greater free cash flow, it would change this model and it would create a greater intrinsic value. Then I'd be more comfortable in buying more shares. So I like to put a little bit of mathematics behind a decision on buying stocks, and I monitor this on the investments that I have in my portfolio. So why did I invest in CTRE? Now, if I invested in just technology growth stocks that are, really, really interesting to look at and invest in, the Metas, Googles, Blocks, you name it, PayPal, and I can go down the list, it'd probably be an interesting, portfolio. But especially in 2022, it would have seen great losses. And, it's okay to bet on companies that I believe in. And frankly, I'm sure you feel the same way, that you believe in. But how about diversifying? And that's the reason why I look at real estate investment trust. I look at more stable industries, maybe industries that you could say are contrarian. When high growth companies are down, these other investments will be up or will be stable. And that's where CTRE fit into my portfolio, is that they're able to generate a nice dividend year after year. And that dividend, it really makes a difference. In 2022 full year, my dividends really showed up. And it was nice to have dividends in a year where it was tough. The NASDAQ was down more than 30%. The S&P was down about 13%. And it was a fairly brutal year in 2022. So it was nice to have CTRE in my portfolio. And that's the reason why I have it in my portfolio. So a quick summary on CTRE. Been a good growth company for, they've been growing 10% for 4 years. 2022 was tougher than the previous years. I think 2022 was tough for many industries. For them, the cost of capital went up. So building new buildings or buying new buildings and having them operated for their use case was more difficult. Cost of capital really went up. So I think fewer number of deals. So their growth was impacted in 2022. But the number of people retiring is not going down. So the demand's still going to be out there. Their free cash flow in 2021 was $151 million. Really nice free cash flow. They paid a great dividend. And their dividend rate has gone up really for 3 consecutive years. So it's really good to see that. They collect their rents really well. Their dividend currently is 5.7%. And their PE for 2021 was 25. This has been a consistent, growing, profitable, free cash flow producing REIT. And they have an earnings call coming up in early February. So that could give us an update on, their full year 2022 financials, which I will be taking a look at. My outlook in a volatile stock market, CTRE has been really a good stock to hold for me. I'm up 6% on the stock and really like receiving that dividend. So I'm going to continue to hold this stock. but not necessarily buy, because I mentioned my intrinsic value calculator. You'd be buying at a premium. I'd be buying at a premium. So I'm going to wait for either their financials to change, which could come as early as February 2023, or their stock price see some volatility for reasons that I can explain. It would still be a good investment if their stock price was just at a steep discount. Well, thanks so much for watching my video. I hope you got something out of it. I hope it gave you something to think about when it comes to CTRE and real estate investment trust. By no way is this a recommendation to buy this stock or any other stock. My intention is to share my experience as I invest. I've been a big beneficiary of YouTubers who share their investing thesis, their investing models, how they look at companies. I've learned a ton online with YouTube. My intent is to continue to contribute to that collective body of individual investors that are looking to invest in good companies so that they can grow their portfolios and provide the resources to their families that they want to provide. Thanks again for watching my video. Best of luck investing in 2023, and I hope you found this video interesting.